Hello, Warriors. Brock, how are you, buddy? Ren, everyone doing okay? All right. Turn around Tuesday, everyone. Eclipse tomorrow. Marco, how you doing? Hi, Jorge. What's up? Louise, it is not quite morning, right, Blake? Still dark out here. All right.
It's not for normal people. Just kidding.
The rooster
However,
hasn't crowed yet.
no, but for most people, it's morning day. There's not that many of us on the West Coast of the United States that are doing what we do. So
Can I tell you something, Blake? When I was a younger guy and I was
yeah,
a commodity broker in LA and I would drive into Beverly Hills from the valley,
yeah.
there'd be a lot of traffic. And I would say to myself, are all of these people commodity brokers? Anyway.
And there's something to be said about Los Angeles traffic. I mean, you can't escape it. I have been literally like you, and I've not as a commodities broker, but I have done things at 3 or 4 o'clock in the morning in the LA area
Yeah,
and
it's like it's
realize
9. Yeah.
why are we bumper to bumper traffic right now?
I thought, man, there are a lot of people in the trading business. Anyway, so we have a continuation weakness in the dollar today, buddy. And, Euro's still leading the way. EG is, pushing up. Maybe we get a reversal in EG that takes some of the steam out of Euro. I don't know. I'm not ready to top pick it yet.
That's so funny you say that, because that's what Amanda was looking at too.
EG up here?
Yeah, she was talking about the euro sterling,
Yeah.
and how that might be what the catalyst that drives the euro lower. But I'm it's just funny you say that, because she was saying the same thing in the
Well,
chat room.
People
Great minds.
that, yeah. Oh, that's a line. Yeah. And you know what, guys, I want to show everyone something. A lot of people have a company line over positions, where, you don't go contrary to your team members. And that has never, ever been the policy here. Blake and the partners has always encouraged independent thinking from the team. And there's no greater example than the active patterns in play that we have here. So you can see, unless, Blake's still short the silver with a nice lead from up here, and Greg is still long gold. So, and they're playing that gold silver ratio spread perfectly. So, not only not the same direction, but different markets. So the gold silver ratio, and they have nice leads here. So when you become a member, and maybe today, you'll see that no one told the company line, and people put out the trades that they feel are going to be the best without consideration. Would they hurt anyone's feelings if they took a contrarian position to someone else on the team, which would really be ridiculous, right? So that doesn't happen here. And really, how could you play the precious metals any better than being short silver on the rally from last week and long gold from before the rally began? So just an example of really the team concept, and yet being independent at the same time. So I wanted to point that out, and also wanted to, show that the S&Ps are, I talked about strength into month end. Looks like it's happening, unless we're going to fail here. It almost looks like a layup for new highs in the S&Ps. It will not confirm. Okay. I mean, if we make new highs this week, with the RSI right now is 58. So, new highs are only about 30 handles away. It's going to be very glaring here on the daily chart. And I just wanted to show you in the gold how important this 1860 level is. And as long as we hold it, you stay long, but be prepared now. Really, gold's the preferred long. And I talked about this last week. and we're getting continuation, and we start closing back over 68.5. I see no problem of us going to 71, and that's going to reinforce the position with silver down 9 and gold up 273. So that gold silver ratio, if you're a PM trader, is just as important as what Blake and I were just talking about, euro sterling, for knowing what your preferred short is. Otherwise, if you didn't do that, right now maybe you'd be long the pound and short euro, and you'd be long silver and short gold. So you really have to pay attention to those kind of crosses, Aussie, Kiwi, down the line. Even if you don't trade them, it's very important to have direction right on those pairs, so that your preferred longs and shorts are good, because you could have been right about the metals and been long silver and not making money, and you could have been right about continuation weakness in the dollar and been long cable or Aussie. So anyway, it's very important to diagnose what leadership is and what is lagging, and we try and point it out every day. Um, Oil is trying to not make a new high. It's getting pretty close here. My trade didn't work yesterday. I'm tempted to do it again, but sure looks like it would want to take out this high, the move. I mean, this is almost an 88% retracement. So stopped out when I shorted it at 61, risked a buck, gone on that one. So, and also yen, talked about the fact that I'm not so sure yields aren't going to break down and soften up. And I don't know if there's going to be any data to change it, but it looks like this is a failing rally, and we're going to take out this 150 area, and that yields are going to come down. So, I mean, that should still be pretty positive for everything, because as long as the dollar's going down, everything goes up, except maybe Bitcoin failed from where it had to. I know Blake's keeping an eye on this. It's trying to hold that spike low, and I really think you need to wait for Blake as a 42,000 level for what it would have to get above. It kind of looks like 40,000, a little over 40 here. We start getting back over 40. Maybe you could give the long side a shot, but we could still wash. So that's Bitcoin. Here's VIX. Looks like it's trying to anticipate something, maybe a turn and a pullback in the S&Ps. I don't know. It doesn't look great to me. And here was the SQQ trade, the short NASDAQ trade that I got out of for 20%. And here we are at 78.6 back. So I'm going to be interested to see what this does when S&Ps are at new highs. And finally, the S&Ps, talked about this yesterday. If this breakout is real, at say 4185, it's 150 handles. That gets you over 4,300. So, that's what I see coming into today. Keep in mind, I know Blake's a big astro trader. We have a lunar eclipse tomorrow. Oh, yeah, just one more thing.
Yeah, no, I'm not.
No, go ahead.
But
Yeah.
that
Anyway,
was a sarcastic comment from Dale.
oh
Just so
yeah,
you know.
yeah. I'll be out watching the eclipse, playing Pink Floyd's "Dark Side of the Moon."
That's exactly what I was thinking.
All right, so maybe Canada. What I'm looking for is a day. You know how all last week, even when the dollar was up, Canada was still down. That's not happening as much. Okay, so the dollar's down commensurate to, it's down 24, and Canada's trying to hold. I still think we get this three driver down here, trying to be patient for it. Maybe it happens this week. And I'm passing the baton to you now, bro.
So you were talking about the S&P. Let's
Yeah.
let's discuss that really quick. Wait, actually, before I go into the S&P here, and I will draw what I had drawn yesterday, and I'm going to leave it there for a second. So I'm going to leave this here for just a second. I want to go back and reference what you had mentioned about the team at ForexAnalytix putting in patterns in play, and what Grega and I did. You know, the thing about patterns in play, I want you guys all to understand what those are. They're patterns that we see develop, and they're more by the book type of patterns. And it's the unique thing about trading is that you will have so many different viewpoints of you know, how you interpret the market based on, you know, the tools that you're using, you know, the approach that you have. But you're exactly right, Dale. I never, and nor has Stelios or Steve or any of us at ForexAnalytix, we don't tell our team, hey, you know, look at the market a certain way. No, that's the beauty of like using multiple types of analysis, is you're going to see things differently. And like, for example, if you use like a harmonic or even Elliott wave type of analysis, a lot of times you're trading counter trend. You know, if you use basic technical analysis, you know, you might be going with the trend because of, you know, the setup that so there's so many different ways to make money in the market. It's you're not always going to be on the same side, but this is a pretty good example of both Grega and I taking different opposing directional trades in precious metals, but still taking advantage of that the divergence between the two. And it's interesting. Grega pointed that out a couple of days ago, and I'm like, yeah, you know, it's interesting, you know, how that works. And I do have to reiterate that these are by the book type of pattern in plays that we see. The majority of the trades that I do are all here, you know, and this is our chat room. You can see this is our, like, I'll just show you. I got up about an hour and 15 minutes ago. So this is when I said good morning right there. And you can see just, and I didn't even post any charts today, which is, you know, ironic because usually I post a bunch of charts as soon as I get up in the morning, but you know, the market's been kind of quiet today. So minus the breakout that we're seeing in the euro. So anyway, that's where I do all my trading, is in the chat room. So the patterns in play are more, you know, swing type of things and more by the book type of things. So, but let's talk a little bit about the S&P. So the S&P, I'd drawn this out, yesterday, something like this that looked like a, you know, symmetrical triangle. And I said, you know, we could do that. But what I'm actually looking at right now, since it is Tuesday, and let's take a step back and look at the S&P. Remember, this is an ascending wedge that you see here. It's also a, you know, a megaphone pattern, you know, however you want to look at it. It's, you know, we broke down a week and a half ago, and then now here we are back at all-time highs. Now, I think the last defense for bears would be that we have a Gartley pattern setting up right at current levels. We'd have to reverse where we're at. Like, and it is Tuesday. I don't want to say that we can't. But I think Dale said it, and I agree. You know, if the S&P actually reaches higher, which I think we're gonna actually do more of a butterfly pattern, which would be something like this. Dude, just so you guys can see what I'm thinking.
Oh, that's all the way up there. Yeah.
Yeah, something like this, I think, is where we're going. If that happens, what happens to the NASDAQ? That's kind of what I'm thinking right now.
Yeah.
Is this. Now, why am I feeling that way with the S&P? And that would mean that we get a reversal somewhere up here, maybe next week, or, you know, maybe later this week. Who knows? Maybe we spike up there today. I don't know. But the reason why I feel that this is doable now is because you've got the euro that's breaking out, and the euro that broke resistance. And this is a bullish wedge. If you read the ForexAnalytix analysis, the end of day analysis, the breakout point, the breakout points are at the 121.40 and 122.50, and a breakout is looming. The setup looks like a bullish wedge. Why is it a bullish wedge? Because if you guys don't know what a bullish wedge looks like, let me go ahead and just draw it out for you. How come my pen isn't? Oh, there it is. Okay, I was like, where's my pen? There it is. Okay, bullish wedge is when you have consistent highs and higher lows, right? That's a bullish wedge. That means there's a higher probability of a move, of a breakout higher, and this is a lower probability, right? Consistent highs, higher lows. Okay. All right. So, in ForexAnalytix, we saw that coming, last night. And so breaking out now above the highs isn't, this isn't catching us off guard or anything. But the question is, how far can we go? And remember, it is Tuesday too. And I'm, I don't want to get super excited about the markets where we're at right now. But what I will say is, if we close the day, that means, going into Asia tomorrow, we close above like the 122.50 level, I'm going to be pretty bearish the dollar moving into the remainder of the week. But the market has been putting in false breakouts a lot as of late. So you have to keep that in mind. I'd like to get super excited right at this moment, but I'd like to see where things close today. So, knowing there's an 88% retracement up here at 122.80, that might reject us. And then, if you get a move to the 88% retracement and then back below 122.50 by the end of the day, I'm going to be a little bit more hesitant about being short dollars, But if we close up here, I think there's a good risk that we now start taking on the new 2021 highs. And you were talking about the Canadian, Dale.
Yeah.
The Canadian's just been kind of struggling. We have this divergent relative strength. It's been pretty prominent. And we should probably note that this is a 2017 low. Or is it 2019? I'm sorry. Oh, no, 2017. 2017 low over here. We also have some 2015 lows that, would come into view below 120. But these are all really important levels because, you have a big double top here. This is like the double top trigger is below 120 or, 121 and change. But I mean, if the dollar closes weak against the euro, the dollar may close weak against the Canadian. The Canadian may have been holding above 120, but it's barely holding on. So, and if you're in the chat room or if you read the, just the basic technical analysis of ForexAnalytix, I've said even last night, and this is the stuff that I update in the evening. End of day analysis, the descending channel continues to keep bears in control while below the 121.50 level. A break of the 120 level is possible despite the divergent relative strength. We're below this resistance, and really we have to get above 122 before I can be convinced that the dollar Canadian is ready to turn. But it's trading heavy. The dollar is trading heavy across the board, so we've got to keep that in mind. And then one last thing I'll point out before I hear what Stelios and Steve have to say today is, like, you look at the Aussie dollar. This is the one thing that makes me a little worried about being too much of a dollar bear. The Aussie dollar is really struggling to break out here. I would have thought if we're going to see some dollar weakness and we have the euro dollar breaking higher, the Aussie dollar's got to start, taking off towards 78. Well, everybody knows 78.20 here is resistance, but really back above, 79 cents would be, I'd be like, all right, we're going to take out new highs. This is going to be, we're going to get a move here. I'll tell you, if the dollar ever bounces, the Aussie dollar is going to be in some serious trouble because this thing cannot get out of its own way. You can blame it on, commodities ready to pull back, or, China, or whatever you want to blame it on. The Aussie is really struggling. And that's something that's very apparent, and we have to keep in mind. And as a result, I'm actually long Euro Aussie. I'm long Euro Aussie. This is a big breakout. So, as far as I'm concerned, the Aussie can continue to nosedive. The Euro can stay elevated, because I think the Euro Aussie is going to go, it's going to go back to the 200-day moving average and higher. But that's my own personal view. But you can see it pretty apparent in the Euro and the Aussie, the divergence on how the Euro is outperforming the Aussie dollar. It's very, very obvious right now, and it's coming through the Euro Aussie. So anyway, just some ideas in the FX market that I wanted to bring to your attention. Steve and Stelios, good morning, gents. How are you?
Good morning.
Hey guys. So Steve, how's it going today? You did not go on a boat in the Aegean Sea over the weekend.
Come on, how long are we going to be talking about that?
Oh, as long as
that's why it's not going well, mate, because I didn't.
So yeah, Stelios has a good tan, and his bald head is all tanned, and
it is.
Look, we're just jealous, man. And we're going to continue to talk about it. But Steve, what's popping up on your radar this morning? One thing we didn't talk about, and I tweeted about it, but I need to mention it. Bitcoin is trading heavy today, and
that's one of the things I wanted to mention, that I think that cryptos are not there yet. That's how it looks to me.
Yeah, when you get a move, an aggressive, or you hear Elliott wave people, they'll say, "Oh, hey, we've had an impulsive move in the market," an impulsive move lower in this case. When you fail to get a bounce or a meaningful bounce, that means the market is trading heavy. That's how we read price action.
Exactly.
And right now, we knew that, and as of 2 weeks ago, the bull bear line was 42,000, 43,000. And we are below it, and we're holding below it. We're even holding below the 200-day moving average. All these, these tweets from Elon Musk can't even save the Bitcoin market. Oh my God, what are we going to do? So you see this in Bitcoin. How are you feeling about the rest of the crypto market?
I think Bitcoin is probably creating a triangle where we are. So I would expect another move lower as the most likely scenario, and some wash out, for more people to capitulate, because as you see, the mentality is still like, oh, we've seen that happen multiple times before. It's buy the dip and buy the dip. And the other day we had, like, on Twitter, the buy the dip hashtag, like be prominent. Yeah. So I don't think they've received punishment enough. So the market, I think, is going to gun for more stop losses, for more downside targets.
Hey, if this is a pennant, Steve, I just drew it out. I mean, if it works itself out, I mean, that's pointed towards 11,000. Now I know
I'm not saying it's unlikely. My next target would be at 24.
I'm just saying, how many people are like, there's no freaking way we're going to go down there. And I have to go back. I have to go back to the week ahead video, and I have to point out, if you go back to 2000, you go back to 2018, and how many people back in 2018 said there's no way that was going to happen, right?
Yeah.
I mean, is this 2000? Oh, that's current. Let's go back to 2018. Let's go back to price action then. I mean, how many people back then, Steve and Stelios, you remember?
Oh, very clearly.
Yeah, I mean, we were at, I guess this is it, right? Nope, I got to go before then. I'm sorry. Here we go. This is this was the breakdown. We hit 20,000, and we broke back below the bull bear line at the time, which was 12,000. And I mean, no one would have thought we were going from 20,000 back down to 3,000.
Yeah,
right.
And we did.
Yeah.
And we did, but what's the difference here? The difference is institutional adoption of the crypto market, if you will. So I've got to ask you guys, do you think that's going to produce
counter argument to that is that there was also institutional adoption of MBSs back in 2005, 2006, 2007, 2008. And we all know how that worked out, don't we?
Yeah, true. It's a good point.
What worries me is that, and I've seen this so many times in my life, when you have such a huge support zone, which was the 42 to 43K, I mean, that was really, really important. When you break through it the way we broke, you usually have to go and retest it. We didn't even manage, the strength to go and retest that. And that to me looks very weak. So...
Yeah. I mean, that worries the hell out of me. And I've sat here and I've thought, and you guys have heard me say this wrongly for months. If Bitcoin starts to break down, how's that going to affect the other risk assets? I'm surprised we haven't seen any spillover. I've truly have believed, and I have shorted the equity markets just recently, because Bitcoin's reversing, we're selling off, and then I short S&P. I shorted S&Ps last week. I had them go up in my face yesterday. I'm like, I mean, do you think that the Bitcoin market and cryptos in general, it's going to ever affect the broader markets and sentiment? What do you guys think?
Blake, remember I said this, what was the week ago? I think they're big enough now to matter, but clearly they're not. And Steve disagreed with me, and I think he may be right. I thought there would be some kind of spillover, because it's still an asset that's large enough now in terms of market cap. The whole crypto sphere is well over $1 trillion, or 2, or whatever it is. So, but clearly they're not having any effect yet. So I'm baffled.
Yeah, I mean, Steve, I would like to hear your thoughts too. But I mean, there's so many institutions that are starting to dabble into the currency market. A lot of funds. You heard Phil Perlman last week. Osprey funds. I mean, they're strictly crypto. It seems like. Is it? I don't know. But how many of those funds are getting just raked over the coals now? So.
Yeah, I don't think there is any serious fund that invests serious money in crypto. I think that any serious fund that wants to participate in crypto does it by a small percentage of the money they handle, just to capture potentially a higher, better return than other funds that are not involved.
Okay, then going back to our earlier conversation about mortgage-backed securities, obviously the market had it wrong back then, but there was a spillover effect. Obviously,
of course there was a spillover effect, but don't forget that
it caused the financial crisis. So there's a much bigger difference, even though the market might get Bitcoin wrong.
Yeah, there is a huge difference, because the MBSs were connected to a key component of the economy, which was the housing market, right?
Yeah.
So once that pillar collapsed, we had cascading effects that involved banks, the health of the financial system, individuals, the housing market itself, big diminishing of the paper wealth of so many people that were using their houses as ATMs. Now, unfortunately, it doesn't matter, if we agree on that. The vast majority of people that participate in cryptocurrencies are younger people, or people that do it with some money on the sidelines. I don't think we have a critical mass of people that have, for example, mortgaged everything they have to buy cryptos. I'm sure there are, there is a number of people that have been naive enough to do that, but do the cryptocurrencies connect so heavily to the real economy at the moment, so any distraction of value can really affect the rest of the system, its health, etc.? I think not.
Unless Dogecoin
I don't believe
dies.
so.
Unless Dogecoin dies, then we're all screwed. Hey, Steve, Stelios, thank you guys so much for your thoughts today. Remember, guys and gals, for more from Steve, Stelios, and myself, we do the face webinar, the Morning Edge webinar. It starts actually in about 45 minutes with our ForexAnalytix subscribers, where we go through the bias chart every day. We go through all these assets right here and look at the key support and resistance levels. And we'll be covering that in about 45 minutes for the ForexAnalytix subscribers. But right now, it is time for Dale's interview with Kirk Spano. So I don't want to take away from that. Make sure you visit our webinar sponsors, Pepperstone Securities and Forest Park FX. You can go to our webinar sponsored tab and learn how to get ForexAnalytix potentially for free and join our community for a few months. So don't miss that. And Steve, Stelios, thanks guys. I'll see you guys in 45 minutes. Dale, thank you. And have a great interview. Dale.
I
Yo,
muted.
Coach.
I muted.
Coach,
Get the edge. Hey, get the edge every morning on Morning Edge.
All right. See
You like
you guys.
that?
I like it.
So crude oil is testing major resistance.
Yeah, and Kirk,
I want to see what. Yeah, exactly. I want to see what Kirk thinks about it. I think we're headed higher again, sooner rather than later. But I want to see what his thoughts are.
Kirk, a lot of people are glad to see you back, and it looks like you turned into a Doberman since I last talked to you.
Yeah, that is my black lab.
Black lab. Okay, much more gentle.
I took her to Times Square a few years ago and let her off the leash, and I just let her talk to people. She did some great interviews.
You know, Kirk, that my psychiatrist diagnosed me as a dyslexic, agnostic, insomniac. You know why?
So you don't sleep, you talk backwards. What else?
Yeah, because I'd stay up all night wondering whether or not there was really a dog.
Well, yeah, there is.
Well, I think God had his best day when he made them. So anyway, Are you like me? Do you like dogs more than people?
It depends on the person, right?
Oh, you're so diplomatic. All right, so let's share your screen, buddy. Steve's interested in your oil view, which I think he's going to be surprised about. So you want to start with this spider? Okay.
Yeah, so because you were just talking about it, I thought I'd throw my spider chart up there.
Okay.
So, I don't do as much short-term trading as you guys, but I do look at these big trends. And there's a couple of different channels here, long-term channels you can look at. I think the one outlined by the red lines, the red parallel lines, is probably more correct than the purple lines. But in this age of super low interest rates and perpetual infinite to the edge of the galaxy, to the moon, whatever, QE, maybe it is the upper channel. And over the last 30 years, I've noticed that the market likes to run to round, shiny numbers. And it seems to me that we're probably going to make a run to about 500 on SPY. And I don't know if that's imminent in the next year or so, or if it's going to take some time with some getting pulled back before it gets up there. But I think it's going to take a very long time to break above this level. So I think that we could see, once we get to around here, around 500 on SPY, I think we could jitterbug around there for the better part of a decade. And there's a whole bunch of fundamental reasons why, but ultimately what we know is that the markets, time eventually fixes valuations, a combination of price coming down, earnings going up, rotations out of the
If I may add, Kirk, time and inflation fix valuations.
Right. So I think that that's all coming.
You know,
And it's
that's not an unusual number, Kirk. I mean, I don't know how you came up with it with what fib extensions. But I know some real good traders that after a pretty big correction are looking for 5200 SPX.
Yep.
So, you know, sometime in like 2023.
Okay.
Yeah, nice look.
I first put this chart together in 2015.
Wow. Okay.
So,
All right. Do you feel like we're close to some type of, you know, we're in a melt up stage where we could get a pretty severe, more than 10% correction?
I have told my subscribers that I think that starting probably in June, the market starts to jitterbug a lot more, a little more choppiness, you know, more than we've seen lately. And ultimately, by the end of the year, you probably get another year-end rally unless there is some narrative, some event, some policy that drives it the other way. You know, we know that the super wealthy home offices are sellers, but we know that the institution.
How do you know that, Kirk?
So if you read Institutional Investor Magazine, they put that out twice a year, what the
Okay.
family office's asset allocation is. Yeah, I think it's one of the more important things to follow actually on stocks, because the super wealthy, you know, your 1% investors who own businesses that are 8, 9, and 10 figures, you know, they're pretty diligent about managing their money.
My family
So-
office, we're mainly buying groceries.
Yeah, you and me both, right?
Okay. Anyway, so that's interesting that they're lightening up here. Okay, so we have your view on the stock market. June, you know, I know you don't pay attention to GAN stuff like the change of the seasons, but really this recent wave in the market really kicked off in a big way in April. So
Yeah.
the market's having a great spring, and spring doesn't end until what, June 21st or so, when
Yeah.
we get to the summer solstice. So, you know, maybe we're at 4,400 by then.
I actually do take a pretty big look at seasonality, and I even have a buddy who's over in Spain, I think he is. He's a European guy who I met online through Cody Willard years ago, and he follows the lunar cycles, and it's been amazing to me how accurate those are. I mean, your day-to-day trades don't work, but your seasonal trades using the lunar cycles, I was like, how can this work out so well so often? So
well, because there's lots of lunatics out there.
Yeah, last one, right?
And we have an eclipse tomorrow.
Do we?
So yeah. So you know, blood moon, Ariel's saying. So wow, a blood moon. Let me ask you before we get to something, the other instrument you want to talk about, just quickly, your feeling about what's happening. We used to talk a lot about Iran, and you know, the fact this recent conflict, you know, that's seasonal too, between the Israelis, Palestinians, and Hamas publicly stating, even though everyone always knew that Iran sent them upgraded missiles, and having some trouble, President Biden getting back into those nuclear talks. Any feeling about any geo risk with Iran coming up?
You know, I said this so long ago that I figured things would come to a head with them. We'll see. I think that at this point, you're probably going to get an Iran nuclear deal signed, sealed, and delivered this year. And that's going to start bringing more oil onto the markets. And I think that's a great deal.
Yeah, that's a great segue for what you wanted to talk about today, and you'll be able to answer Steve's question. So, oh, you want to talk dollar too? Okay,
well,
go ahead.
Yeah, I don't know that we have enough time, but you know, this will be
well as long as you get to oil.
Yeah,
but go ahead. This is interesting.
So I just had an interview with Dr. Schoenstein Smith, and we talked the future of the crypto dollar and cryptocurrency, and the flippening. I just sold all my Bitcoin a few months ago, and I started buying Ethereum last week because I had a limit order in at 2,000, and I woke up one morning and I owned it. So, you know, we don't want to spend any time on this, but if you're interested in what we talked about, you know, there's a webinar out there you can watch, and he is, you know, he's on the Wall Street Blockchain Alliance. This guy is crazy informed. So
Okay.
it's real good information. And that all dovetails into the dollar, which dovetails into oil. So
Okay.
been charting the dollar forever, just these big macro trends. And, you know, you have these zones, you know, you have this Goldilocks zone where the dollar, you know, doesn't hurt the economy and really kind of helps it. So the dollar's been coming down, the market's been rallying, you know, we've been
Right.
getting a bit of a recovery. But if the dollar gets too low, you kind of have this support zone in here where once it gets in here, you're kind of in a danger zone. You're like a, you know, danger Will Robinson. If the dollar gets too low, lots of bad things can happen. And we've seen that when the dollar really got too low, you have a financial crisis. So I told my subscribers, oh, I don't know, 2 years ago, 3 years ago, whenever this happened, I said, when this happens right there.
That was 2018.
Yeah, 2018, you know, you have to be very wary, because if it doesn't start to stabilize and then gently rise again, you got problems. You got big problems. So we're getting to that danger zone. And I believe that the dollar probably stabilizes in here. But who knows? You know, you've got a Federal Reserve chairman that's going to be changed next February. I think a lot of things will react to that. Because I certainly don't think Powell's going to stay. I don't think they're going to keep Powell.
You don't?
Well, I don't. I think it's incredibly unlikely.
Okay. When is its term up?
February.
Okay.
Right.
I like that red line you have at 95.58 because, you know, a lot of people are looking for a dollar collapse right now on a breakdown out of your sweet spot.
Yep.
And I think we're closer to a bear market rally low around that sweet spot that could get back to your red line around 95.50. And then we have a major bear market. I just think there's one little hurrah that may be spurred on by risk off late summer, fall. So where the dollar gets a pop. But beautiful work, really, Kirk. You haven't seen your charts in a while. And
you know, what's funny is that red line is just the algorithm that figured out where that should be.
Okay.
I barely know how that works.
Okay.
So,
it's an interesting zone.
It is. And, you know, in technical analysis, one thing that I've learned in over 2 decades of doing it, I started doing it in the late 90s when it was totally not popular. When I, you know, because I was a financial planner, stockbroker, you know, working in an investment advisory office when that wasn't cool either. And, you know, you try to tell people technical analysis and they looked at you cross-eyed. You know, they said, oh, that's all, you know, voodoo magic. You know, like, well, if it, you know, if voodoo is one thing, but if it's magic, it's another, right? So when things work, you just have to acknowledge, okay, it may be over my brain level why it works, but it works. And it works such a high percentage of the time that, you know, as a semi-pro poker player, I'm actually playing a lot of professional poker this year. You're just trying to put the odds on your side over and over and over again, knowing that sometimes it won't work out, right? Sometimes you lose with aces. But if you put the odds on your side over and over and over again, it works out. Well, I think when you look at the dollar down here, at some point soon, you probably have to go long the dollar, right? Which means short U.S. stocks, probably short commodities, but it's probably a reload point. It's, you know, it's not going to be the end of the world thing.
Right.
That's the way I look at it. I could be wrong. Ask my ex-wife. I've been wrong before.
Okay.
So, all right. So oil. This is the chart of USO. And last spring, you had all of the new traders, the Reddit army, everybody got into the oil trade, right? Because it went down to zero for that hot minute. And they jumped into the USO because they don't know how to trade futures, right? They're not like you guys where they know what they're doing. They just bought. You know, I'm going to buy oil. So they bought USO. And they're all bragging now because their USO has done pretty well if they bought down in here. Well, you know, and what we know is that most of them bought in here, right? So they're sitting on a 50, 60% gain, and they're bragging about it. Well, I try to tell them that USO is a crap product. They go, no, it's not. I go, well, look at this. Well, that was an anomaly. Okay, let's compare it to oil going back further. And then you see the actual price of oil in orange, and then you see USO, and you go, oh, I don't know what to think about that. But they changed the formula a little bit over here. Okay, so let's just look from the point where they changed the formula. And it's still trailed by a ton, right?
That's interesting.
I think that you're probably in a position right now where you have to take a look at Iran and the real supply demand situation in oil. And obviously timing it is the absolute hardest thing to do. However, we know that the big secular trend is against oil. We know that 5 years ago, 6 years ago, they flooded the market with oil and they killed over the last 6 years about half of the U.S. oil industry, right? There's about half as many companies now. Still a lot of holes in the ground, and you have a couple of important players, you know, Pioneer Resources is I think the monster there, right? The one that David Einhorn called the mother fracker. And, you know, I think they're the only U.S. oil company worth investing in. There's not another oil company in America that I would invest in. And the reason being is that in the Middle East, they have the cheapest oil. And they have had to dramatically hold back on production for years now. And they're running into the point budgetarily where they just can't do it anymore. I think the price of oil probably settles in that 40 to 60 range for a very long time. And I think we're at the top of that range here. Now. Yeah.
What do you say to guys talking 75, 85 here?
You know, it could happen as a trade. I mean, there's no doubt that you can get that short-term rally into the summer, and you can get that trade. And if you get that spike up, that last puff on the cigar, I mean, I really don't think I should hear you talking about 100 unless there's a war, right? So, you know, I think that there's always the possibility that you can go counter trend. And the counter trend here is that long-term secular decline of oil is real. And it's accelerating. I was at CES last year, and I'll tell you what, all the things that people are talking about today, about EVs and everything else, they were talking about it at the Consumer Electronics Show last year. And I've sent a number of messages over to Ford in the last year and a half, telling them, hey, get on the train of switching over to EV and hybrid ahead of everybody else. And they waited for GM to make their announcement about getting to be predominantly EV and hybrid by 2035. And Ford comes in, backdoors them, waits for the GM announcement that says, well, we're going to do it by 2030. And in Europe, it's going to be by 2026. So the demand destruction in oil is really going to hit hard 7, 8, 9 years. And the question you have to ask is, when does the market really reflect that? And what is the method of Saudi Arabia in particular, but even the rest of OPEC, because that relationship is clearly fraying? How exactly are they going to maximize their revenue? Do they try to keep the price of oil up by controlling supply, but allowing the American companies to continue to take share? Or do they just say, you know, let's put the final nail in most of the American oil industry coffin and start pumping more oil and just let all of them but the top 6, 7, 8 producers die, which is what I think is going to happen. You know, I agree with the CEO of Pioneer. I think there's only a half a dozen viable oil companies in America of any significant size. And I think that Exxon is in big trouble. I think Chevron's probably going to chop along. I think you see major M&A in that industry, and it's all going to shake out in price. So ultimately,
let me ask you what you think of this. Lower oil prices make EVs not as competitive. Wouldn't it be in the interest of the green movement to have higher, even extremely higher oil prices to promote EVs and make it a clear-cut case of economics that they're so much cheaper to manufacture and run, and the public will run away from having to pay $5, $6, $7 a gallon for gasoline? Don't you think actually that would be build the case for EVs, higher oil rather than lower?
the problem with that is that you can't win an election when oil's that expensive,
Okay, good
right?
point.
You
Yeah.
just can't. So can you get spikes in oil? There's no doubt. And can you trade those? I can't. I'm not as good as you guys at that, but you can. And I think that if there is a spike of oil here in the short term over the summer, which I think is if you're saying that it's likely, then it's probably likely. Then I would take the other side of that bet. And what I told my subscribers last night for the first time, I said, look, sometime this summer we're going to start betting against oil, and I don't have the gumption to bet on it going up one last time.
Okay.
But
how are you going to do it? What vehicles? I know you're not going to use USO. Well, that's a bullish ETF anyway. What instruments are you looking at?
The best way to short oil obviously is use futures, but most people don't use futures. And I don't have a futures room, so we use options. And I think the best option for us is once oil is really heading, going down the contango way, you just buy puts on USO, because USO has the deterioration to begin with and the roll. So once we can identify that the monthly roll is bad for USO, and then we just buy puts. And the drop on USO is going to be fantastic because it's just a crummy product to begin with. So, in a downtrend on oil, whenever that happens, it's in contango, we can start betting against USO. On the future side, what you guys are doing, obviously you're doing a lot of technical trading, and you can ride those trends, and you're what I would call real-time traders, right? I mean, you don't get into a trade thinking I'll check back in a year. You're checking back every couple minutes. So, I think that is two different types of trading. Obviously, I'm more of a position trader that does some swing trading. You guys are swing traders that do day trading.
Let me remind our viewers about one of the best live trades ever recorded in Face history was during the COVID crash. And the metals, GDX, everything was tanking. And you were talking about, you were thinking of buying it. I said, well, look, here we are. And I said, it looks like a pretty good buy here. And then you said, I just bought it. And that was the bottom for a huge winner. And so one of our attendees remembered that call that you made a year ago. Yeah, I remember it. We were on right near the low of the metals during the COVID crash. Yeah. So Kirk has an eye, guys. I'm just telling you to pay attention to what he's looking at. I know you wanted to talk about maybe a crypto pairing. We have about 6 minutes left if you want to go there.
Sure. Yeah, I'll expand on that oil trade. So we bought it on that day on air. Sent out the alert within a minute of me being off with you.
Yeah.
We trimmed up in here.
Yeah.
And you can see where my arrow is. We loaded up right there.
Yeah. Again.
And it's been going up. I actually think that I don't know if this chart has my target on here or not. Let's see.
GDX going to 100.
Well, I got it at 55.
Okay.
But it could
You're
get
using
all
fibs now, buddy.
I've always used fibs. I just never put them on the chart. The thing about fibs, like I said earlier with technical analysis, there's a lot of things that work.
Yeah.
And sometimes you just have to say, well, this is the correlation. This is what works. I mean, sometimes these lines get gravitated to. Who the heck knows why? You just start saying, well, it's some natural thing. It's part psychology. It's so many people using it that maybe it just makes it a self-fulfilling prophecy a lot of times.
Yeah.
Whatever. It works more often than it doesn't. Don't ask why.
So explain to people that may not be able to understand how you could have a bull market in gold miners and a bear market in oil when they're both kind of considered inflation hedges.
Right. So with gold, obviously it does well in deflation and inflation, depending on whether it's changing direction or running a trend. And the long-term problem here in the world for a long time now, for almost 20 years, for sure 12, since the Great Recession, is the long-term trend here is deflation because of demographics and the impact of technology and massive debts around the world. And they try to fight this deflation with inflationary policy. So you get these central banks who just pour money on the problem. And the reality is that they created a bigger problem, right? They float the market until the market says, this shit is broken. Excuse the language. Right. And so at some point, that's why Bitcoin, right? Bitcoin's main attraction is as a store of value. In this interview with Smith, I started talking about the role of money. So what's the definition of money? It's a unit of account, it's a store of value, and it's a medium of exchange. Well, Bitcoin has a hard time with medium of exchange because not a lot of people are buying their pizza with it. However, it is a store of value because it's scarce. And ultimately, I think that Bitcoin can be seen as a store of value because there's only so many of them, but it doesn't have a lot of utility. And that's the reason why I just flipped from Bitcoin to Ethereum, is the utility of Ether, of Ethereum, is just so much greater. You can use it in contracts, you can use it in all sorts of different things. And now they're changing the way that they do the, not the mining, but the clearing, I guess would be the right word, from proof of, I forget what it's called, but they're changing the way they're doing Ethereum so that it's less energy intensive.
Yes.
And it creates a link, which is something we talk about in that interview. It creates a link to the traditional financial system. And that's something that Bitcoin doesn't really have. So like I said, I accidentally bought Ethereum the other day because I had a limit order at 2000. I woke up and apparently it hit a low of 1966, right at the line, basically where I thought it would head to, because it needed about a 50% correction. I mean, it just happened to happen. Somebody tweeted something, the Chinese, threw up their arms and yelled, "Hey, we're commies, listen to us." Yeah. And, so everything corrected. I do think that Bitcoin goes up quite a bit when the ETFs come online, and that's another topic we talk about. I don't think Bitcoin is the one that owns super long term, though. I think that there's going to be a spike when the financial products get into the market and people start to put Bitcoin ETFs into their IRAs. And then once that rally is done, you gotta be careful. But between now and then, I think there's a heck of a rally coming up in Bitcoin. I think that Ethereum, though, is the one that has a super long-term future.
Okay, well, it did go through a period of outperformance in the last month or so. After Bitcoin had peaked, Ethereum kept going. Kirk, why don't you let people know the best way to follow you? And you're doing podcasts now and etc. So go ahead. There's Kirk's website.
Yep, just come on over to Fundamental Trends. You can find me on Twitter at Kirk Spano. I now also have an alter ego, and maybe you'll be able to find that. It's Unreal Elon Musk. And
Oh,
I've just been teasing him just because it's fun.
oh,
And I
okay.
did create something, if you don't mind. I created a coupon for anybody who's watching on Forex Analytics. I don't have a lot of swing traders in my trade room, mainly position traders who would like to do more swing trading. And, I run out of time in the day. So I'm going to make an offer to anybody who likes to swing trade, in particular stocks and ETFs. If you want to sign up to Forex Analytics, my most expensive service is called Rare. It's $599 a year. I'll give you $500 off. Have it for 99 bucks. Just participate in the chat room and help people learn swing trading and technical analysis. Send them your charts, show your charts. I'm just looking for people who can help populate the chat with good ideas and a lot more swing trading knowledge than I have, because I'm good at it, but you guys are great at it. And
Well,
what I've watched you teach people over the last couple of years, Dale, Steve, and everybody. I mean, holy cow! I mean, what a service you guys have.
well, thank you, Kirk. It was great to have you back. And people, Kirk has a great eye. No one's perfect. Everyone is wrong at times, but I feel comfortable using Kirk for an intelligence gathering service as well. So, Kirk, thanks again for being here. I think I have you scheduled in September to come back, and
Yep.
appreciate you being here today, my trading warrior brother.
Yep,
Very
thanks
nice
very
interview.
much. Thank you very much. That code is Forex Analytics. Should be pretty
Okay.
easy to remember.
Okay. So your website one more time.
Fundamental
Trends,
There you go.
www.fundamentaltrends.com.
Yep, there you go. Easy.
Okay. All right, everyone. So that's Turnaround Tuesday. Good hunting the rest of the day. And I'll see everyone tomorrow. Remember, don't just count your cryptos, count your blessings. And we'll see everyone tomorrow. You're welcome, Brock, DJ, Sinatra. Everyone's thanking you, Kirk. And I'll be talking to you soon, buddy. Adios.
Yep, you take care.